Another one of trading stock at year end. So if you maybe want to follow their DBE November 2021. So we have to calculate the value of the closing stock on 30 June 2021 from formal suits. And it says here that we have to refer to information B. So I'm literally going to go past information until I get to information B, because it says I only have to look at information B. This says that, note, we are using the first in, first out method. In other words, we have to start with what we had on the 1st of July. We are first going to sell whatever we had in stock on the 1st of July. Second of all, we are going to go to November, because that was the first purchases for the year. As soon as we have sold all of these units, then only will we continue with whatever was sold in February. Once all of that has been sold, we will sell whatever we purchased in May. So when you look at your year-end balance, so the units that you have in stock at year-end, it should only include, should only include units purchased on the last day, and then maybe something purchased on the second last purchase date, because you want to first sell and what we are going to sell your opening stock, because otherwise you won't purchase any new things. Okay, then we just have to keep in mind that we might have had some returns. So the returns here happened on the 25th of May, and it happened at a unit cost of 2,850. In other words, you returned goods purchased on the 18th of May, because you see that it's the same unit cost there. Okay, so you will return the units at the cost at which you purchased them. So you, in fact, didn't have 250 units of the 2,850 suits that you purchased. You had that minus 24. So you actually only had 206 suits purchased at 2,850 rand. Right. They then said that at year end, you had 240 units. So remember, to determine the number of units you have on hand at the end of the year, they said it's the opening balance plus all the purchases minus the returns. That would have given them the units that they had on hand at year end. But what they now want you to do is they just want you to calculate the value of the units that you had at year end, keeping in mind that you sold opening balance first and then your purchases per date. So that means that what you had left at year end has to be here in this block. Why am I saying in this block and not just the last date of purchase? Because you have closing stock 240 units. And then if we look at the last purchase, so the 18th of May, you only have 206 units that you purchased on that day. So 206. And that was purchased at 2,850. Okay, so in other words, you still need to account for the difference between your 240 closing balance and what you purchased on the last day. So that means that you need to go to the 10th of Feb. And the number of units that you're going to take from 10th of Feb purchases is your 240 minus 206. Okay, so that means that 34 units of what you purchased on the 10th of Feb is still in stock at the end of the year. So 2016. So in other words, we look at this, it's your 206 times 2,850. So that's 587,100. 7,100. So that is the units in stock purchased on the 18th, the last purchase date. And then you also have 34 units that you purchased at 2,600 on the 10th of February. So that is 88,400. So you have in stock in total the 34 units and the 206 units. So therefore, your stock at year end was 675 or 500. 500. Okay, so just to recap again, they said that you had in stock at year end, let me just put in some color here. Okay, you had in stock at year end, you had your 240 units. You know that first in, first out means that I first have to sell the items that I purchased first. So that would obviously be your opening balance because you purchased those prior to the current financial year. Once you have sold that, you're going to move on to the first purchase of the year. Then, when you have sold all of those units, you will move on to the next and so forth. So in other words, if you look at your closing balance at year end, this has to be the last purchase that you made. And because you have a return, you have to subtract that return from the purchase in the month in which that return occurred. Or you can look at the unit cost at which you returned it. So that means that you no longer have those 24 units. You actually only have the 206 units available for sale. So because your year-end stock quantity was 240, it means that you definitely had the last purchase in stock. But you didn't only have the last purchase in stock because you only had 206 units, which means that you also have to have some things left from the purchase of the 10th of February. And that is the difference between the total units on hand and the last purchase. That is where you're going to find that 34 units that you still have in stock. Then you have to multiply the number of units by the unit cost provided per purchase date, and then add the two to get to your final stock. This is then obviously the amount that you have to go and add in your SFP for your formal suits. That is the first and first out method.